Hey, welcome guys to our new series on what is a mortgage process looks like for any buyer as well as for sellers. I got my good friend, somebody that I confide in and working with and always been my client, John Ramirez from Madison Mortgage, and John's team is amazing. He gets back to you. One of the most important part in this other industry, can somebody get back to you right away? This dude is on point, closes a lot of deals. I mean, he's a rock star from the very beginning when I met him, and he's continually improving as we move forward. And John, just and spell your name because every time we are always like talking, like, no, it's the first time we spoke, like, is it John? Like, no, Jahn, which is pretty unique that's out there. So just brag about you for a couple of seconds, and we'll get right into it so we can educate these buyers and sellers that are out there.
Yeah, well, thank you for that amazing introduction. So, like Rami said, my name is John, spelled Jahn, and I run a team called Team John. We have about 7 people on the team. I just finished interviewing somebody a half hour ago, so maybe I'll have another team member to add in a couple of weeks, hopefully. So, we pride ourselves on 3 things: excellent communication, very low interest rates, and speed. So low rates plus speed, that's what people want. And the number one complaint in the mortgage industry is, oh, my lender doesn't communicate with me. I left my lender a voicemail. I left them 2 voicemails, or I left her a text message and nobody got back to me. So we pride ourselves on having a very high degree of communication with our consumers and our real estate partners, whether it be title company, an attorney, a real estate agent, or appraisal company, but we always communicate at a very high level, which makes the process a better experience for the consumer.
And I could contest for that too. I mean, our communication with our agents is like you got a text message going. Everybody knows what's going on with the
Group chats.
applications. Yeah, everybody knows what's going on with the application, and I thank you for that. So, John, in this series, we want to focus on really educating the buyers and the sellers. Why? Because I think it's so important. And the whole process. I mean, we hear interest rate, we get all these videos out there, but I want to start from the scratch. And guys, we're going to have about 10 to 12 and maybe even 15 series of this. So really short segments, so that way you could educate yourself and when the buying process starts. And even if you're refinancing, even if you're looking to go ahead and buy a second or third home. So let's look at the first process. What happens when we send you a client or a client comes to you? Quickly, so that way we could kind of crunch in all the other information that we want to start looking into.
That's a great question. So when we receive a new referral, right, from a referral source, a real estate partner, whatever the case may be, our first priority is to communicate with that referral, that customer, immediately, right? Normally they're working or they can't talk, or which is no problem. So we then try to say, okay, if you can't speak right now, let's schedule a phone appointment, right? And I work flexible hours. I mean, if the only time that Rummy's buyer can speak to me is at 7:30 p.m. tonight, no problem. Whether I'm in the office or from my home office, I will call that buyer at 7:30 p.m. So the first level of priority is communication, right? We receive a new buyer that wants to get a pre-approval, so we have to communicate with them immediately, talk to them about the process, what entails, and let's start getting into the application, because the foundation of any pre-approval is the application. Without you can send me 50 documents on a buyer. If I don't know the whole story and I don't know where they've been for the last couple of years, documents are useless. So it's all about the application.
So when you're looking at the application, is that a mandatory thing? Because I get a lot of clients are saying, "Hey, here's my credit score, here's my income. What can you do?" Right? Because a lot of the clients out there are scared of running their credit scores and all this other stuff as well. So you think that the application is important as we move forward? And I just want to be transparent here, right? Because I want you to think as a buyer is talking to you right now, and if he's talking to you as a buyer, what happens, right? Because their mindset is completely different. The avenue that they're coming from is, I don't want to run my credit. Here's another lender, just like another realtor. And why do you want my application again? And I got to fill up another form? Like, how does that work?
So we could do it 2 different ways. And also for those customers that are a little sensitive on getting their credit ran, or or if they got a first pre-approval and now 2 weeks later, you're telling them to go to me and now I'm looking to give them a second opinion or better pre-approval. The beauty about us is that we only do soft credit checks, right? Every single day, your credit card, open up your wallet. Tell everybody who's watching this, open up your wallet right now, your purse or your pocketbook. You see those credit cards? Those companies are doing soft credit checks on you almost every week, every month, every year. Why? Because they want to make sure that they evaluate you for credit line increases, or if your credit score went down, they'll shrink your credit line from 7,500 to 4,000 because they think you're a risk. So soft credit checks have no impact to you whatsoever, which is why we're one of the few lenders in the country that actually do soft credit checks in order to give somebody a pre-approval. So this way the customer doesn't get hurt.
Right, right. So that's an easy way for them to say, hey, look, listen, do I qualify? Do not qualify? And is this really hurting me as we move forward? All right, let's move forward as they're coming in to do the application. What's the next process that happens? What are you looking at? I know there's two major things that we always look at: the down payment, work history, three or four, and you can correct me if I'm wrong. You're looking at the application, you're looking at the down payment, credit score, right? Two major things: work history, and depending on if you're independent or not, we could look at that too as well. What else are you looking at when you're looking at the application?
So the biggest thing that I like, my perception of like being on this side of the fence when customers come in is like, there's a perception that like getting a mortgage is like getting a credit card. It's just run an application, that's it, or one size fits all.
Right.
Nothing in the mortgage industry is one size fits all. I get customers calling me, what's your rate? What's my rate? There's over 14,000 interest rates in America. Are you buying commercial property? Are you buying a warehouse? Are you buying a one-family house in Kentucky? Or are you buying a condo in Manhattan? Because guess what? All of that will result in a different interest rate, right? If Rami, you buy a house tomorrow with 5% down, and it's going to be your primary home, and I'm buying a 4-family in the Bronx, and I'm not going to live there, that's an investment rental property. You and I are going to have two very different interest rates, my friend.
Right.
So there's no such thing as, hi, you're a bank, you're a mortgage broker, you're a credit union, what's your rate? It's a very vague question, right? Why? Because what goes into an interest rate? Credit score will determine your interest rate. Occupancy. If you're going to live in the house as your primary home versus a secondary home in Texas, that's your vacation house or an investment property. So those three types of occupancy goes into the interest rate. So interest rate, occupancy, the type of property, the mortgage program, and the size of your down payment will result in a specific rate that's for you. Same thing with a consumer. If you're self-employed, you're going to qualify in a different manner than somebody who's a W-2 teacher at a high school in Brooklyn, right? So income comes in all different shapes and sizes, right? You have people who are self-employed. What about a retired person? They don't file tax returns. They get $3,000 a month in pension, $2,000 a month in Social Security, and maybe they have, $500,000 IRA that distributes a monthly check to them for another $3,000. So there's so many different types of incomes that we have to evaluate to see how we're going to structure and underwrite your income. So this way it's perfect and you have a flawless pre-approval that is guaranteed to close.
So let's talk about that. So you got the application in, you're looking at this application, and now you're looking at the credit score, you're looking at the down payment, and then whatever income that they're getting, and it could be different sources. So I don't want to concentrate on that. So you're looking at a pre-approval first to get them a pre-approval, right? A pre-qualification. Right off the back, quickly, what is the difference?
I love this question, and I'm so happy that you're asking. There is such a thing as a pre-qualification letter versus a pre-approval letter, right? What's the difference? Without naming names of these banks, there's, to a bank, if you walk in there or you call them on the phone and they run your credit with a hard credit check and you have decent credit scores, they'll email you, or if you go there in person, Rami, they'll hand you your very own pre-qualification letter. They'll ask you verbally, are you working? Okay, great. How much money you make? If you own a pizzeria, that makes a lot of money, but yeah, I own a pizzeria. We make about 200,000 a year. That's a very vague number, because when you go to your accountant, a lot of that stuff gets written off. So what's the real number? So just a verbal information will give them a pre-qualification letter.
Qualification. Okay.
Here's the danger. A pre-qualification letter is not vetted, right? Because you never submitted your documentation. And the theory behind that is, because I have a lot of friends that are in banking and credit unions, is that once you find the house, then you go back and then you submit your documents to see if you qualify.
Got it.
Versus a pre-approval letter, we do all the pre-underwriting or the vetting or the research up front. So if and when you find that house that's within the parameters of your pre-approval, you're guaranteed to close.
Got it. Got it. Almost a guarantee to close as a pre-approval, because
Correct.
better than. So that's
Everything
important.
has been vetted.
So that's important, guys. And I'm gonna leave it off of that, and then we're gonna have another segment on, you know, the down payment, what you're looking for, the interest rate. Thank you for this, John. Let's go ahead and you know, get out of here. I appreciate everyone. Look for the next video, so that way you could be educated. Have an amazing day. This is a pre-approval against pre-qualified. Have an amazing day, guys. Thank you.
Bye, guys. Thank you.